Hello, everybody. Another very bleak day in the Turkish markets. This morning, the Turkish lira was down as much as 13%. This is extreme. We have actually to go back to the last full-fledged currency and banking crisis in Turkey in the early 2000s, before President Erdogan and his AKP party came to power, to see something that resembles this. This is worse than what we saw in 2008 or in 2006, where we also saw major market corrections, but this is really bad. And it's very clear that investors has more or less completely lost confidence in Turkey and the Turkish government and in the Turkish central bank. So where do we start? Well, the next thing the markets will be looking ahead for is what the Minister of Finance will say at 2:30 local time today, when he will reveal a new economic model for Turkey. What that is hard to say. It sounds like somebody wants to give up market economy, and I must say that the rhetoric from the Turkish government increasingly has sounded like something you would hear out of Venezuela rather than out of a developed market economy. So it's pretty scary. Obviously, it does not scare investors less that the Minister of Finance happens to be President Erdogan's son, a Minister of Finance who has no credentials to be Minister of Finance, and has little respect in the global financial markets. So obviously, there's a major credibility problem. Second thing is, of course, what about fiscal policy? I had a little back and forth on Twitter this morning whether the problem in Turkey really was a fiscal problem or public sector or private sector debt problem, or is it a monetary problem, or is it a fiscal problem? Well, it's a little bit of everything, but I think that people in general commentators who have looked at Turkey for many years tend to overestimate the strength of Turkish public finances. It is correct that during the rule of the AKP party and President Erdogan, public debt in Turkey has been brought down quite significantly, and the primary deficit isn't huge. However, the primary deficit has grown rather significantly in recent years, despite of the fact that the economy has been growing relatively robustly. So what we've seen is a structural erosion of public finances in Turkey, and as a consequence, the Turkish debt level, the debt ratio to GDP, is now set to increase rather sharply, despite of the fact that we have this likely acceleration in nominal GDP growth due to a significant acceleration in inflation. Why is that? Well, the reason is that bond yields have skyrocketed. It's skyrocketed because the market do no longer expect the Turkish government to take enough corrective measures to reduce the fiscal imbalances. Hence, there is increasing speculation that the way to get that fiscal adjustment is through higher nominal GDP growth, and the only way you get that is through easier monetary policy, and that means a weaker currency. This is, as I said so many times before, some unpleasant monetarist arithmetics at play, and the Turkish lira consequently is suffering, and bond yields are shooting up. The risk premium on Turkey is shooting up. So we need to start with fiscal adjustment. We need to see some fiscal adjustment. But so far, the Turkish government has taken no steps to assure the markets that would happen. And many commentators are saying, well, this is not really what's needed because fiscal policy isn't that bad. No, it isn't. But if market participants no longer expect the regime to be fiscally conservative, it used to be so. Since 2002, 2003, the AKP party has been fiscally responsible, fiscally conservative through different ministers of economics and ministers of finance. But the fact that President Erdogan increasingly have spoken in terms of very unorthodox economic policies rather than following the traditional orthodox economic medicines. The markets are now no longer expecting a fiscal correction when it's needed. So what we're getting is that the risk premium, of course, also on Turkish debt is going up. And therefore, the risk premium on Turkey's interest rate should be going up. And of course, consequently, the Turkish central bank should be hiking interest rate to reflect the increase in the risk premium. And it hasn't done that to a large enough extent. So, by default, it's therefore easing monetary policy. And of course, that in itself is causing a spike in inflation expectations. And now, of course, every citizen in Turkey is now wondering whether their savings are safe. And obviously, as a consequence, we are both seeing households, companies, foreign investors, domestic investors trying to get out of the lira, getting rid of Turkish assets. So it's, of course, self-reinforcing in that sense. When credibility suddenly disappears, this is happening. There's nothing panicky about that in that sense. Is that it's a natural consequence to the gradual but accelerating erosion of Turkish policymakers' credibility. So how do we adjust to this? Well, instead of a new economic model, the Turkish government needs to acknowledge that economic fundamentals apply, that gravity eventually sets in, and you can't get around that. A way to think about Turkish problem maybe more fundamentally is that we can compare Turkey to two countries. On the one hand, Venezuela, and on the other hand, Russia. Why do I mention these two cases? Well, Turkey, Russia, and Venezuela are to different degrees authoritarian regimes, with strong presidents being in charge of most things. In Russia, President Putin knows that economic fundamentals apply. Again and again over the past 15, 17 years, Putin has shown that he follows rather orthodox economic policies. He's fiscally conservative, and Russia has a floating exchange rate. And the Russian policymakers have acknowledged that the fiscal house have to be in order, and if it's not, you will have quick erosion of your credibility, and that would end badly. And of course, we saw recently the Russian government implement pension reforms, increasing pension age, to show up confidence in Russian fiscal policy. Clearly a move in the right direction. Also a needed move, I should say. On the other hand, we have Venezuela and President Maduro. President Maduro is a socialist. He's fundamentally a socialist. He's not just something he's saying. He believes in socialism. He do not believe in economic gravity. He do not believe that public finance have to be balanced over the long run. He seems to believe that he can spend more money than he has. He also seems to believe that inflation is not a monetary phenomenon. So if he's asking the central bank of Venezuela to print more money, he wouldn't expect inflation. He will blame speculators. And now ask yourself, between Putin and Maduro, where is Erdogan? Erdogan has, through all of his time in power, been a fiscally conservative president, or earlier prime minister. But over the past 5 to 7 years, I would say, that has gradually changed. We have seen earlier AKP top officials being removed. The latest one to go is Mehmet Şimşek. I could also mention Ali Babacan, Abdullah Gül, high-level policymakers in Turkey who were economically liberal, free market-oriented, fiscally conservative policymakers. Those were the reformists of the early days of the AKP. These policymakers is why international investors 15 years ago loved Turkey as an investment case. They're all out of the picture now. Instead, President Erdogan has said that interest rates should be cut to zero, that high interest rates cause high inflation. He has appointed his son-in-law as Minister of Finance. He has moved in the direction of Nicolas Maduro rather than in the direction of Vladimir Putin. I'm talking here in terms of economic policy. I'm not talking about alliances, because Turkey is increasingly aligned with both nations, both Russia and Venezuela. So what's the story here? And it's really one that more fundamentally the Turkish government and the Turkish president need to convince international markets that it's fiscally conservative, that it would balance the budget, that it will cut spending, that it will ensure central bank independence, that its key policymakers are credible, knowledgeable, economic caretakers. I thought that would have been relatively easily fixed, let's say 2 or 3 months ago. I now think it's becoming increasingly hard, and as a consequence of the delayed adjustments, the needed adjustments become larger and larger. So what do we need? If I was asked for a concrete plan for Turkey right now, what would I advise? First of all, I would advise that President Erdogan calls President Donald Trump and make sure that the conflict between Turkey and the US is improved immediately, so the US ends sanctions against Turkey. That would also open the door for the US okaying, if necessary, some kind of IMF agreement. Secondly, I would announce significant fiscal austerity measures, and I think we talk about fiscal austerity in the magnitude of 5% of GDP. Upfront, committed, strong measures. I will replace the Minister of Finance by somebody with strong economic credentials. And Turkey has a number of very, very good economists, former policymakers. I would also replace the central bank governor with a similar type. I would very strongly recommit to the independence of the central bank and of the inflation target. All of that is needed. And that might not even be enough in a situation of tighter global liquidity. So yes, what we're seeing in the market seems to be very, very extreme. But the point is that when credibility disappears, you need to take a lot stronger measures to re-establish credibility than would have been needed if you had acted earlier. And then finally, just a comment on the exchange rate. This crisis is not about the lira. There is not a crisis in Turkey because the lira is weakening. The collapse in the lira is a symptom of the crisis. It is not what has created the crisis. Obviously, we are seeing higher inflation. Import prices are increasing because of this, etc. But the underlying causes of the crisis have nothing to do with exchange rate. Rather, imagine a situation where Turkey had a pegged exchange rate. Then Turkey's crisis now, instead of have 40% weakening of the lira this year as we've seen against the major currencies, then we would have seen massive internal deflation. And likely the Turkish banking sector at that point would already have collapsed now. Obviously, a weaker lira is not good for parts of the corporate sector and the banking sector in Turkey, which is exposed to foreign currency loans. But it would be much, much worse than if the Turkish central bank just tried to maintain a stronger currency. Imagine that the policy rate was hiked to 100%. It might, for some time, stop the slide in the lira, but also mean a significant monetary contraction, a massive drop in nominal GDP, consequently both private and public debt as share of GDP would spike massively, causing banking and fiscal crisis. Turkey should continue to allow its currency to float. It should not implement capital controls or currency controls. It needs to solve the very clear problems. Re-establish a good relationship with the US and consequently with the IMF. Ensure fiscal policy is balanced, sustainable, meaning fiscal austerity. Assure investors that the central bank is independent as committed to its inflation target, and replace both the Minister of Finance and the central bank governor with capable economists with strong economic policy making experiences. These people exist in Turkey. Turkey is a country blessed by having very good policymakers, having very capable economists. Bring them in, bring them in. Turkey do not need a new economic model. No, Turkey needs to re-establish, bring back the economic model that made Turkey so great back in 2003, 4, 5, which by the way was the model then Prime Minister Erdogan should take a lot of credit for making sure being implemented. Fiscal conservative regime, market reforms, privatization, moving closer to the West, to the EU, inflation target, independent central banks. This is what made Turkey a great investment case. This is what made Turkey grow so strongly in the early 2000s. Turkey can easily do that again. Turkey, by the way, do not need outside advice to do that. Go into a random Turkish university, find an economics professor who speaks his mind. Most likely he will say exactly what I just said, if he dares. Turkey do not need outside advice. My advice for international and domestic investors: I hope Turkey will find its way. It's a country I appreciate a lot. I have many fond memories from Turkey. It's a good country, and I hope the government realizes that this crisis can relatively fast be solved, but it needs to be resolute. And then investors, both domestic and international, will return very fast. Thank you very much and good luck.